My failure in the stock market has been well documented. I am not a stock guy, but you know what? One rental at a time brings on Wall Street veterans of a decade plus. And I'm going to ask Taylor a very, very important question. Taylor, what the heck do you do when you think stocks are overvalued?
Yeah, it's such a good question because right now, full disclosure, if you say, Taylor, what do you think about the stock market? I'm going to tell you it's overvalued. And you can look at it on a plethora of different metrics, whether it is the fact that we're in an earnings recession with the stock market trading at almost 20 times forward price to earnings multiple, which is really optimistic. Whether you look at the fact that we thought interest rates were going to be cut later on this year, and now that's completely reversed course. And throughout this entire time, earnings recession, rates being higher than what we anticipated, stocks have done nothing but gone up. And so the underlying fundamentals really draw into question, hey, does this make a lot of sense? And my answer to that is, in the short term, valuations have never mattered. It doesn't matter in the short term. Momentum drives the stock market in the short term. And the momentum is clearly to the upside right now as you look at every single day and the market's green. This
Mhm.
is the fastest start through 114 trading days, which is where we're at this year so far, that the stock market's had in 25 years against a
Wow.
backdrop of negative earnings, against a backdrop of rising interest rates. That doesn't make a ton of sense, right? Companies are making less money, their cost of capital is going up, and the stock market shoots higher. But at the end of the day, I make a lot of these comments and I talk on social media every day, whether it be on Instagram and on TikTok, and I back everything up with the sound fundamental data. I don't just make opinions, I give data behind it. And one of the things that people consistently say is like, okay, you're clearly short the market. Or
Mm.
Taylor, you clearly have sold out of the stock market. You're an idiot. You've cost yourself a ton of
You're
money because the
jealous.
market's ripped. You're jealous, right? Yeah. And that is so far from the truth. Like when you look at what I do in general is I'm about an 80-20 investor. So that
Right.
means I'm about 80% stocks, 20% bonds. I have a long time to grow capital. So therefore that's a relatively aggressive stance. So what I do in a scenario where I think stocks are overvalued is maybe I take that 80-20 and I make it 75-25. I trim the winners that I have on the stock side to fund some of the things on the other side that have a higher margin of safety. The bond market. The bond market does a lot less of this, right? It's more of a steady as she goes type portfolio. But at the end of the day, the bond market doesn't go up as much. So when I trim the stocks and fund bonds, I'm giving up some of the upside potential for some downside protection. And I
Yeah.
think that's the key to what people need to understand when I say things are overvalued and how I, as someone who has built portfolios for folks that have 8, 9 figures as families, how I build portfolios for them to give them that margin of safety, keep them in the market, but not have them get cut in half if the market comes down in a massive way.
Yeah, I think it was Benjamin Graham who famously was a mentor of Warren Buffett said one
Yep.
time, and I'm going to misquote this, I think, the market over a long term is a weighing machine, but in the short term, it's a popularity contest.
Correct. Correct.
And, we are in that moment where it's frankly momentum, right?
Yep.
Fundamentals aren't at play. Now, the real question is how long can it stay a momentum play? The answer is longer than you could be liquid.
Correct.
you know,
Correct.
if you were going to short a market like this, it could just rip your face off.
Yeah.
And, I have somebody on my channel who still believes we're going to a 52-week high. Or yeah, well, actually, we already had a 52-week high, a new all-time high. Sorry, a 48 in change. That's
Yep.
possible, right? We're
Yep.
I don't know 10% of that today. But that doesn't mean at some point valuations matter. Maybe a third quarter of negative earnings or a fourth quarter of negative earnings, something. But yeah, this is shorting stocks into momentum is gambling.
It's a way to get your face ripped off. It and I'll tweak your words a little bit, not on your original comment, the weighing versus popularity, because that's spot on. But the market can remain irrational longer than you can remain solvent. That's why you
Yeah.
don't short the market, because again,
Right.
the momentum is behind the market right now. There's so many people on my channel, on Instagram, on TikTok, that said, "Hey, I shorted back so and so," and I'm like, stop shorting the market. The only reason why you short the market or even buy put options on the market or whatever it means, right calls, whatever it is in your negative sentiment, is to protect a current position. So if you're long a position, you might want to sell options against that because you think the market might come down, and that's going to protect you on the downside. So like those are ways, and the reason that the options market was built. Now options are being used as speculation, and speculation is not what they were necessarily intended to do. And again, shorting the market and an outright short is absolutely speculation. And speculation, I'm reading this book Outsiders right now, which is just a phenomenal book on business in general. But speculation, they say, is the activity of forecasting the psychology of the market. So not the fundamentals of what drives stock prices, but the psychology of the market. And the psychology of the market right now, to state the obvious, is that things are going to continue to go higher. And so, you know, speculation on the long side, speculation on the short side. I guess at the end of the day, what I always say is like, listen, figure out what your correct asset allocation is for your needs, diversify, create that allocation, and then just continuously dollar cost average into it. And then if you want to be more active, you make fringe changes. You don't make wholesale changes. And that's my point of moving 5% out of stocks into bonds. Like that's a big move, 5%.
Yeah, very cool. Well, this is important. I do not ever recommend shorting. And it's really funny. Obviously, you know, I'm a real estate channel, at least majority of it. Thank you for balancing me out. There were a bunch of content creators who are bearish on housing about 6 months ago that said short home builders.
Yeah, and they got their face ripped off. They got their face ripped off. Yeah, absolutely.
I hope people didn't follow that.
Yeah, because for context, what that means is they're up about 45% this year across the board. Maybe even more than that. I think that's about right.
That's about right for the index. Yeah, for the index. Yeah.
So you're down 45% this year, and again, you have to have you have the differences. And I'll shut up on this. Is like the difference is if you're going to short something, the only way you can do that is if you have ultimate fundamental research given something, whether it be mortgage-backed securities in 2008. The people that shorted the market that made a killing there spent months and potentially even years leading into that
reading the damn things.
Correct.
Exactly. Yeah. And then there is a famous short selling group. I'm going to call it Hindenburg.
Yep.
Is that it?
Oh yeah. Or you just go, or you do what they do, which is awesome as well. So they just write essays on how these companies are mismanaged and they tank. And which,
well, let's be clear. They set up shorts, then release the article.
Correct. And I will say this though, like that makes it sound super shady. They do real fundamental.
They do fundamental analysis. I mean, their write-ups aren't hearsay.
Correct.
They are opinions, but at least I think they are well thought out opinions. I haven't read one in a while. I remember reading one, I don't know, a few years ago. I'm like, you know, at least they back up their opinion. So
well, they tanked that Indian company, which was a massive conglomerate. The gentleman became like the top 5 richest person in the world.
I remember that.
Absolutely tanked that. And then they just went after Carl Icahn.
I think it's Carl Icahn was the last one.
They just went after him, and Icahn got bruised up based on it as well. Because again, the difference with them is they can write something because their pedigree is so darn strong. They've shown the ability to forecast when these things are numbers are not correct as they're being stated.
Yeah, I think again, if you go back and look at historical, this is from memory. They're not always right, but they're pretty accurate.
Correct. Yeah, and again, markets don't move on BS. So
no, exactly.
The fact that they can push a market around is real.
Yeah, and the last thing on that is if they had a reputation of being wrong, it wouldn't matter.
Correct.
It's just
correct.
There you go. Well, Taylor, do me a favor. Where can people find you?
Yeah, find us at Life Goal Investments. We're both on Instagram and on TikTok, just trying to make investing, financial, market concepts real simple.
Awesome, buddy. Thank you so much.
Thank you.